The crypto market is looking pretty decent today. We are seeing a lot of green across the board. However, the main thing that we need to be very cautious about is this pump turning into a major sell-off like the previous ones that we've witnessed. So until we start to clear some key levels and we get that daily candle close, we need to be very cautious by getting a little bit more excited and hopeful that this will continue until we get that close, because typically when we get the close, it means that we are starting to see some sort of sign of life. And also we can manage to look at the chart, see some nice price data, see if we are creating a higher high and bullish structure, and then kind of go from there. But looking at things right now, Bitcoin has been hovering just under 90K. It did break over 90K just recently. XRP still under $2. I'm not really going to be that bullish on XRP until we start to break over that $2 range again. I mentioned multiple times on the weekly view for XRP, as long as we close above $1.91 on the weekly, then we should still be pretty good. Again, we did get that nice close above $1.91 for the weekly candle close. Looking at this on the 24-hour view, again, we are still in that clear downtrend. And the main thing that I'm looking at here is reclaiming $1.94 on the daily. Managing to have a daily candle close above that would be very, very good. Also, by the way, since going all the way back to October 10th, we've been technically creating bullish divergence, because although we have been in a downtrend, and you don't even have to go all the way back to October 10th, you can even just go back to November 22nd, because although we've been in this downtrend and price action has been continuing lower, our RSI is still in a slight uptrend, which is telling us, hey, we are in bullish divergence right now, because RSI is still continuing to the upside. And just to kind of, show that to you guys, here you have it. It's a very slight uptrend, but it's still something to go off of. But if you go all the way back to the October 10th candle, then obviously it's a little bit more clear that we are in that bullish divergence, because although RSI is doing this, price action is doing the opposite. And that's typically what you want to see in the sense of bullish divergence. So I'm still very hopeful that XRP is going to be doing very well going into the end of the year. But the main focus is, of course, 2026. I don't think that, we're going to see anything special going into the end of the year. But we are definitely hopeful that we start to break some of these key support zones, flip them back into support, and start to build back to some of the prior highs, which is what I'm mainly focused on in 2026, is us breaking through some of those support levels, reclaiming them, and then, of course, breaking through major resistance and starting to have a retest of the prior highs. Now, beyond XRP, looking into Bitcoin. So Bitcoin is looking very good. Again, we have RSI in an uptrend. We are in this wedge where we've just kind of consolidated a bit, and we're still creating higher highs and higher lows. So that's very bullish to see. Main thing today that I'm looking for, well, realistically, I'm not going to get excited on Bitcoin until we break above like 94K. So having a big break above 94K, and I would even argue like 94.5K or so. If we manage to have a daily candle close above that level, then hey, Bitcoin is going to have a much larger push in the market. But we need to have, some sort of major impulsive move here to get a daily candle close over the prior highs, which is right around like 93.6K. So that's what I'm mainly watching for with Bitcoin. So far, price action has been looking pretty good. The weekly candle closes, they're not crazy. We are still technically just chopping here. And you can see the clear consolidation here. It's very similar to the prior lows that we've had this year, like going all the way back to March into April. It's very similar where we have that it's constricted price action. It's where it's like really coiled up. We're just waiting for something to happen. And that typically leads to some sort of, major impulsive move. And it could be to the upside or even the downside, which is why we're watching closely for something to happen here on the daily view, where we start to have a much stronger impulsive move to the upside. Although, yes, I like that we're seeing this positive price action, it's very minuscule to what we want to see here on Bitcoin. So it's a good start. We need to see a little bit more. Now, let's talk about 2026, because I do think that 2026 is going to be a very big year for crypto. I think that's generally going to be very good for, just finance itself, for stocks, for crypto. And the reason why is, of course, liquidity. We know that back in the beginning of the month, the Fed officially ended quantitative tightening, QT. This was definitely great to see because typically when we see this, just going all the way back to 2020, right? We had QT all the way into 2020. Then we got the QE. It's technical QE. I love when they just call it these certain things because again, it's, what it is, right? It's QE. So we got the technical QE. Then we got during COVID, the official QE where we were starting to see trillions of dollars in liquidity injected into the system. And then that continued all the way throughout up until QT. Now, during this time, liquidity really peaked around 2022. And it was technically the first half of 2022, which is why we started to see such a massive wipeout of markets. And that's what also led to the demise of so many things happening around crypto with FTX imploding and Luna. And obviously those things are going to implode anyways, but it doesn't help when liquidity gets constricted. In fact, it starts to implode those things. But regardless of that, the main thing that we're looking at here is, of course, the pattern, right? QT ends, then technical QE begins, then full-on QE. Markets, just continue going crazy because liquidity is flowing. And that's where we're really kind of at right now, where we're looking at, what happens next with the Fed. And so far, we know that today, the Fed is set to pump $6.8 billion into the market, bringing total injections up to $38 billion over just the last 10 days. Will this liquidity injection help Bitcoin and crypto markets recover? And again, it might have a slight boost, but we need to see this really accumulate. And that's where we're really kind of looking at 2026, because if we're going to see these liquidity injections continue into 2026, it's going to accumulate more and more, and then we're going to see the markets expand to the upside. It's same song and dance from previous times where the Fed has started to inject liquidity. We don't see an immediate push. We start to see a slow climb to the upside, and then all of a sudden liquidity accumulates, and then we see that major impulsive move. We saw this back in 2020 or back in 2020 into 2021, and we'll most likely see that again this time around. Now, on top, of course, of the Fed injecting liquidity, remember that post from the beginning of the month where I was talking about the Kabaisi letter putting out this breakdown of 10 reasons why we will start to see a push to the upside. The biggest technological boom since the internet, ongoing Fed interest rate cuts into the AI boom, Trump's impending new Fed chair announcement, $700 billion plus in annual technology capex, the end of QT, widespread deregulation initiatives by the SEC, the most market-conscious U.S. president ever, $2+ trillion in annual deficit spending, 13% year-over-year earnings growth in the S&P 500, the return of global fiscal stimulus. Again, there's been so many signs that going into 2026, there really isn't this crazy bear case. Everyone's been looking at, the market, and they're saying, well, looking at the price action, we're extremely bearish. But then I look at Bitcoin, and I really look at Bitcoin on the weekly, right? Because I'm looking at this and I just don't see how we could be extremely bearish here when it's almost the same exact setup going all the way back to roughly the first half of 2025, where we had this massive sell-off, everyone got peak bearish, and then we started to return in a huge way. And by the way, I wish that I can see the 3-day here because I did share on X, and I actually have that post real quick. Let me just go grab it because I posted this yesterday, and it's the 3-day view of the total, not even Bitcoin, right? Where we have this downtrend in the total market cap of crypto. However, we have that bullish divergence on the 3-day view for the chart. And we have the same exact setup here. And also the moving average is, being broken here the same exact time that we saw back in April. So this is very, very similar. Now, on top of all of this, we just heard from Scott Bessent saying that Q1 of 2026 should bring massive tax refunds to the U.S. households. $1K to $2K per household, 100 billion to 150 billion total injection ahead of the midterms. He says that the economy starts lifting off in Q1 to Q2. That timing is not accidental. Big shout out to Merlin, the trader, for this, and listen closely to what Scott Bessent is telling us.
Maria, let's go back. The one big beautiful bill was passed on July 4th, but for working Americans, it was retroactive to the beginning of the year. Most taxpayers did not change their withholding. So as a result, we're going to see very substantial 100 to 150 billion of refunds in the first quarter go directly to Americans' pockets. So the sooner they file, the sooner they'll get them. Our estimate is it could be 1,000, 2,000 per household, depending on the number of workers.
Wow, that is a big deal. So, Secretary, you've talked about this additional money from the tax code that we're getting. You talked about the impact of the big, beautiful bill. It sounds like you think we're going to get a real economic boost for the macro story in the first or second quarter. Is that what you're saying?
Yes. I think it's going to start lifting off in the first quarter and the second quarter. And, you know, Maria, the other thing, when I started my career on Wall Street in the 80s, people used to focus on trade. Were we building more in the U.S. or were we importing more? We're seeing the trade deficit drop too. So the trade deficit drop means more production in the U.S. So I think that's something that economists are going to have to start looking again, thanks to President Trump after 40 years.
Well, you're proposing a major shift now in how the government approaches financial stability.
So yeah, I mean, listen, when we think about what's happening going into 2026, it feels as if the entire setup is there. Now, is this all going to work out in our favor? Well, we have to watch, wait, and see. But we already know that global liquidity is expanding. The global money supply just hit a record 45 trillion. China is leading right now with 16.5 trillion in their M1, which is 37% of the global, while the US is sitting at about 8 trillion, which is 18%. So if we're looking at this, it seems as though, yes, liquidity in the US is going to start to increase drastically to catch up to China. It typically happens like that. We saw that back in 2020. Same setup here for 2025 going into 2026, right? 2020, we didn't see the markets expand with liquidity. In fact, we watched as the markets lagged behind going into 2021 when we started to see them officially expand. And then building on top of that, right, we do have that Bitcoin chart against the M2. Big shout out to Ash Crypto for this. We have Bitcoin is moving in the exact opposite direction of the global M2 liquidity. Either everything crashes from here or Bitcoin explodes in 2026. Now, that whole idea of like, oh, everything, either crashes or it goes higher, like, all right, well, we don't really have a clear view, right? Because anyone can make that assumption. However, I mean, looking at this, typically Bitcoin has followed the global M2 supply closely. I think that the main thing that we're looking at here is that, obviously everyone just expects that this chart has officially broken and Bitcoin's no longer going to, follow liquidity, and crypto's not going to follow liquidity either. I think it's a lag. I think that we're lagging behind here. Obviously, I don't think that Bitcoin is going to go absolutely crazy like 250K, 300K or anything like that. But I do think that it will start to break to about roughly 150K, 160K. We might even tap like 200K possibly, but I do think that we will catch up to this chart. I think that we're consolidating right now. I think that a lot of liquidity got sucked out of crypto back in October, which definitely did affect the correlation to the M2 supply. But going into 2026, it's pretty clear that right now, Bitcoin is severely undervalued compared to global liquidity. And typically when we've witnessed this happen, Bitcoin has had these like sharp periods of time where, we are drastically, undervalued compared to liquidity. We go back to like 2019 where Bitcoin had that same sort of setup. Bitcoin was in that setup where it just kind of was chopping and ranging while liquidity was improving. And that's what caused Bitcoin to go absolutely insane leading into 2020. And then after that, we witnessed COVID, which was a black swan event. But realistically speaking, if there wasn't any COVID, Bitcoin most likely would have hit closer to like 100K back in 2021. This time around, we don't really have a black swan like COVID. Maybe we do going into 2026. It's unknown. But if we don't, then Bitcoin should carry to about roughly almost $200,000. And we should sharply follow the liquidity cycle. And it's not just about Bitcoin, right? If Bitcoin does that while Bitcoin dominance breaks down, which I am expecting, then altcoins like XRP, the stage is set. And again, this is not a video talking about, oh, like this is a guarantee. No, listen, nothing is guaranteed in finance. We could easily have, in 2026, a massive wipeout of the markets. We don't need to see anything crazy, but in my opinion, when we have everything aligned like this, when everything, is showing us a clear view, typically it does play out. Liquidity is already improving. We already see the liquidity globally expanding. We just heard from Scott Bessent talking about these massive tax refunds hitting households in Q1 of 2026. It feels as if the market is going to wake up in a big way Q1. Going into Q2, we potentially have a top very similar to like back in 2021. We'll have to see. But I do think that the markets are going to recover heavy going into 2026. So with that being said, I hope that you guys enjoyed this video.